How China wins the trade war. To inflict more pain on China, the Trump administration last week raised the ante in its trade war. It now promises that the next round of tariffs on $200 billion in imports from China will be 25% instead of the 10% announced earlier. President Trump exhorts his supporters that tariffs mean jobs and great wealth. If jobs and wealth are the metric for winning the trade war, China, not America, will emerge the victor. China will win not because of one-party rule, although it certainly helps President Xi Jinping weather difficulties caused by trade tensions. Rather, China will win because it is playing this game more skillfully. The tariffs imposed by the United States will mostly be paid by American companies and consumers, while China is retaliating with moves that soften the blow for companies in China, including those that are foreign-owned. To win a trade war on these terms, the United States would have to impose tariffs that somehow hurt the Chinese economy so badly that its leaders improve their treatment of American intellectual property, a long-time demand by American trade negotiators. The health of China's economy depends on exporting to the United States, so, the thinking goes, the Chinese government will capitulate to American demands. This strategy is certain to backfire. First, about 60% of China's exports to the United States are produced at factories owned by non-Chinese companies. Many of them produce customized inputs for American manufacturers, such as computer routers, LED fixtures and boat motors. That means the tariffs imposed by the Trump administration that are directed at China actually affect many American companies that own factories in China. These companies cannot immediately respond to tariffs by quickly moving their operations out of China. Instead, they will absorb the import tax or pass it along to American consumers in the form of higher prices. This is already happening. A 20% tariff on washing machines imposed in February was followed by a 16.4% spike in consumer prices for these products. So most of the revenue raised by the tariffs is coming out of the pockets of American consumers, not Chinese companies. Reduced American demand for Chinese products does hurt China. American merchandise imports account for about 3% of Chinese manufacturing revenue. That's a large enough share for tariffs to do a bit of damage, but certainly not catastrophic. Moreover, much of what the United States imports from China contains value created in other locations, including America. Much of the value in NIPHONE imported from China, for example, includes displays from South Korea, chips from Japan and design and programming from America. So each dollar of sales lost by a Chinese company actually has a less than $1 impact on the Chinese economy. In computers and electronics, which account for the largest share of China's exports to the United States, the Chinese value added in each dollar of imports is about 50 cents. Consequently, the negative effect of tariffs on Chinese manufacturing is unlikely to be large enough to have much of an impact on China's trade practices. As the trade war escalates, China's leadership appears to have deepened its commitment to international supply chains. This is the opposite of the Trump administration, which seems intent on isolating American manufacturers. For example, in its first round of retaliatory tariffs, China avoided hitting the imports that feed its foreign-owned factories. That helps cushion Chinese manufacturers and foreign investors from the impact of the trade war. In late June, Beijing made it easier for foreign investors to enter banking, agriculture, and automotive and heavy industries. After further tariffs were announced in late July, China restated its intention to further open up its economy. Tesla recently became the first foreign automaker in China to get approval to operate without a local partner, with a deal for a wholly owned factory in Shanghai to produce electronic vehicles. These moves send a powerful signal to investors that China remains committed to its international partners, even in the middle of a trade war. To be sure, China still engages in policies that undermine fairness in the world trading system. China has failed, for example, to meet commitments to open specific sectors to foreign participation. It also continues to subsidize heavy industries that flood markets in other countries, depressing prices and causing job losses. But the tariffs imposed by Mr. Trump failed to address these challenges. Instead, when the next round of tariffs hits, American households will face higher prices on computers, clothing, and thousands of other products. China, not the United States, will improve its standing in the world as a place to make and build the future. Round 2, U.S. China announced newest round of tariffs as Trump's trade war shows no sign of slowing down. The U.S. will impose a 25% tariff on $16 billion worth of Chinese goods starting August 23. The tariff will mostly apply to industrial equipment, like tractors and chemicals. In response, the Chinese government also announced a 25% tariff on $16 billion worth of U.S. goods that will go into effect the same day. The move is the latest escalation of the trade war between President Donald Trump and China. The U.S. and China rolled out a new wave of tariffs as the trade war between the two countries rolls on. The U.S. will impose a 25% tariff on another $16 billion worth of Chinese goods starting August 23, U.S. Trade Representative Robert Lighthizer announced Tuesday. The new set of measures are the second tranche of tariffs that President Donald Trump originally announced in March, following an initial round of tariffs on $34 billion worth of Chinese imports that went into effect in early July. It represents the latest salvo in the ever-expanding trade war between the U.S. and China. The 279 items that will be hit with tariffs at the end of August are mostly industrial goods such as tractors, plastic tubes, and measurement equipment, like speedometers. In response to the Trump administration's announcement, the Chinese Ministry of Commerce announced that the country would impose an equal tariff of 25% on $16 billion worth of U.S. goods coming into China. The list of goods subject to the tariffs includes energy products, like coal, as well as large items, like cars. Trump has threatened to levy a 25% tariff on an additional $200 billion worth of Chinese imports to the U.S., a move that would blow open the disagreement between the countries. China responded by promising to hit $60 billion worth of U.S. goods coming into the country with tariffs. The Trump administration has maintained that the tariffs are necessary to force China into change in economic behavior it says harms the U.S. For instance, the major complaint is about the theft of U.S. intellectual property by Chinese firms. China, on the other hand, argues that the tariffs violate World Trade Organization rules and only harm both countries. Beijing is expected to hit $16 billion worth of U.S. goods, with equal tariffs in response to Tuesday's move. Economists warn that a prolonged trade war between China and the U.S. could end up increasing prices for American consumers and hurting U.S. businesses. But given the lack of talks and Trump's unclear goals, the trade war doesn't appear to be close to a resolution. Here's a timeline of the US-China trade war so far. March 1, President Donald Trump announces tariffs on all imports of steel and aluminum, including metals from China. March 22, Trump announces plans to hit $50 billion worth of Chinese goods, with a 25% tariff. China announces tariffs in retaliation to the steel and aluminum duties, and promises a response to the latest U.S. announcement. April 3, the U.S. Trade Representative announces a list of Chinese goods subject to the tariffs. There is a mandatory 60-day comment period for industries to ask for exemptions from the tariffs. April 4, China rolls out a list of more than 100 U.S. goods worth roughly $50 billion that are subject to retaliatory tariffs. May 19, after a meeting, the two countries announced the outline of a trade deal to avoid the tariffs. May 29, the White House announces the tariffs on $50 billion of Chinese goods will move forward, with the final list of goods released June 15. The move appears to wreck the nascent trade deal. June 15, Trump rolls out the final list of goods subject to new tariffs. Chinese imports worth $34 billion would be subject to the new 25% tariff as of July 6, with another $16 billion worth of imports subject to the tariff at a later date. China retaliates with an equivalent set of tariffs. June 18, Trump threatens a 10% tariff on another $200 billion worth of Chinese goods. July 6, the first tranche of tariffs on $34 billion worth of Chinese goods takes effect. China responds in kind. July 10, the U.S. releases an initial list of an additional $200 billion worth of Chinese goods that could be subject to a 10% tariff. August 1, Washington more than doubles the value of its tariff threats against Beijing, announcing plans to increase the size of proposed duties on $200 billion worth of Chinese goods to 25% from 10%. August 3, China announces that the country will impose tariffs of various rates on another $60 billion worth of U.S. goods if Trump moves forward with his latest threat. August 7th, the U.S. announces that the second tranche of tariffs, which will hit $16 billion worth of Chinese goods, will go into effect on August 23rd. The Trump administration just announced tariffs on $16 billion in Chinese imports. Here's what's new. The Trump administration just announced tariffs on another $16 billion in Chinese imports to the U.S. This latest round makes good on the president's promise in June to impose a 25% tariff on $50 billion in Chinese goods. An earlier round of tariffs that went into effect on July 6 applied to $34 billion in imports. The additional tariffs will go into effect on August 23rd. A list published by the U.S. Trade Representative's office indicated 279 import product lines for tariffs. Here's what's new. True to their word. The latest round of tariffs demonstrates that the administration is willing to keep its word on threatened tariffs. Of the list of 284 goods on which the administration threatened tariffs in June, only 5 have been removed from the list. That level of consistency may be a warning to China not to take the administration's threats of a 10% tariff on an additional $200 billion in imports lightly. Like the July 6 round of tariffs, the goods on the latest list are primarily raw materials for manufacture, rather than consumer goods. If the $200 billion in threatened tariffs were to go into effect, consumer goods would be hit harder. Domestic fatigue. U.S. businesses are growing more weary after months of a trade war most of them recommended against. Industry groups have warned the administration that the trade war will have long-term effects on farmers, manufacturers, and consumers, while the Semiconductor Industry Association said it was disappointed and puzzled that their products were on the list of tariffs released Tuesday. On the day of the announcement, the trade war took its latest casualty as a TV manufacturing plant in South Carolina was forced to cut back to a skeleton crew. The layoffs are another step toward the 2.6 million American jobs the U.S. Chamber of Commerce says could be lost because of Trump's tariffs on Chinese goods. At loggerheads, after months of escalation, neither China nor the U.S. seems willing to make any concessions to end the trade war. After an earlier offer by the Chinese to buy more American goods to settle the trade dispute was rejected, the two sides haven't held negotiations for months, volleying tariffs back and forth instead. Last week Chinese authorities said they were prepared to tariff another $60 billion in U.S. goods, though they didn't provide a timeline for the introduction of these tariffs. As Vox points out, it's difficult at this point to see how either side could back down, meaning we could be in this trade war for the long haul, even though almost no one wants it.